Welcome to TradeTheNBI.com. This is John. This report is for the 5th of January. Well, we had the positive NBI magenta leading, but we were still stuck with orange on the DOC here between cyan and red, suggesting that we were going to have continuation, which was just mostly sideways. And there you have it. It was a positive finish, but still well below the 50% level, just above the 38 was the close. And just continuing sideways. And again, this is just mostly because of the uncertainty of really what's about to take place. I mean, we've got some big numbers that are supposed to be coming towards the end of the week, which will give some clarity, at least at the short term. I mean, some people are projecting dovish comments from the Fed. Others are saying they're going to stick with where they're at. Um, More likely, it seems like there's no reason for them to change course at this particular stage. They're not under any significant pressure to do anything other than that. So I would suspect they'll hold the line. The potential for resurgence of inflation still exists. Fortunately, we haven't been getting some of the negatives, and because of that, and we'll see it as we look at commodities and that oil declining and stuff. Provide a positive impetus for the economy. So if you're not suffering, massive depletion of jobs in that, then the potential for the Fed to ease, I think, is diminished greatly. And so that's why we watch those things. They're key barometers. From an NQ standpoint, much more negative. I mean, we had NBI white now poking up. That suggests a move back towards the zero. We had no dip of orange, in fact, pivoted higher on the DOC. So that suggests that not going to get much follow through, even with what we're seeing right now is just slightly rising red, green, but short term buyers finally fading off a bit. There still hasn't been much activity from a short side. So this is all just really a bull situation. If buyers aren't showing up, um, there's just nothing to hold things in place. So, but you don't have any active reason to be selling. So, at that particular case, I think people are modestly going to want to jump in just to have a position. From treasuries, of course, the doves keep thinking that the Fed is going to have to ease, and so rates declining slightly. And there it is. Big drop from oil. I mean, you went from 80 down to 73. That's a significant move in 2 days, and uh, that's a bonus for anyone who needs to buy gas, which is most of the world. And every improvement you get in that gas price makes a difference. And certainly below 70 and even in the 60s, I think you start to get a turnaround potential for economic conditions. Um, Interesting though, on the opposite end of it, gold continuing to rise. So some aren't buying the idea that the Fed is going to be able to contain what the expectation is for a resurgence of inflation. And when you look at budgets and things like that, there's no question that continued printing of money is going to keep at it. Euro, after pretty decent decline, certainly pops right back up. It's just a short one-off. The eurozone still is in bad shape, but again, those kind of factors easing. Unseasonably warm weather has also helped. If it had been a colder start to the winter, things could have been far worse. So that has been quite a help. And Bitcoin, kind of still flat. I mean, this is what we talked about. It wasn't going to be that strong a move. It's kind of what we're seeing from the overall market. That rejection of the orange DOC popping up certainly makes it more difficult to sustain any move and have any real oomph to it. Um, but as things clarify, again, this is one of those where if you had ever had any intention to, be in crypto or whatever, probably one of the best times. I mean, as much negative news that can come out has probably been out on it. And from that point, it becomes then just a question of uh, usage and whether or not it becomes more and more necessary in practical application. And that would be the next potential move uh, for things to rise. So not a bad play for those that are involved in those. 50K, it just shows that kind of erratic side. We had some decent down, nice move back up. We came back. It's still hovering above the 50, so that's still a positive impetus at this particular stage. A little bit better than what you're seeing from the daily, and so that's part of that intraday action. Um, when we look at it from a 5K standpoint, it was an early rise, so a lot of it happened pre-market, and then as the market opens, you get the sell-off. But that was quickly bought back up, and that was just a straight move up. And once that completed with the positive extremes, starting all the way back here, all we did was fill them back in. That's the beauty of seeing those positive extremes. And so this is very normal activity. And then once we got there, but you'll notice that still right between pre-existing algos, that 3860 has been the magnet for oof, quite some time now. And we just keep ranging between the low end of it down at the 3823 and this 3893. We're on the upper side of it. And it looks like we're going to be holding within that pattern, at least in the short run. I think there's still potential for more upside bias than otherwise, unless there's some catastrophic reading that comes through that nobody's expecting. But for what it looks like now, everyone that was gloom and doom and or super stoked are both wrong, and we're just sort of kind of in a apprehension mode, waiting to see how things develop. And of course, um, Congress being paralyzed actually becomes, I think, somewhat bullish, because it just means there's an inability for things to go wrong. Of course, they already approved their budget and stuff, but a lot of the individual spending and things can't get done without committee chairs and things like that to make it happen. And until the speaker's chosen, things get paralyzed significantly. So that's the long and the short of it. As always, though, look for me on the Skype chat. Trade well. We'll talk again later.